The monetary metals are in a bull trend, and now they're in an accelerated portion of the bull trend. Now, you can argue, when did that bull trend begin? We defined it in February 2016, a couple of months off the low. We said, that's it, it's going up. Where silver does follow gold, but it goes ahead, goes behind. There's a point at which, though, not far above current spread levels. And what we do is we measure the price of silver versus gold in terms of dollars per ounce versus dollars per ounce. So right now, silver's about 1.23 or something, the price of gold, 1.23%. If you get up to about 1.3%, we've got technical reasons to assume you're going to blast. In other words, the silver-gold spread will unleash, not just for a few days, but probably likely months, several months.
Gold has stood out in the commodities market this year, with prices surging around 33% and trading close to record highs of $2,800 per ounce. In contrast, silver has lagged behind, struggling to keep up with gold's gains. While gold reached multiple all-time highs, silver remained below $30 per ounce. However, according to one analyst, this dynamic could shift in 2025, with the gold-to-silver ratio expected to begin moderating from its recent elevated levels. Michael Oliver, a renowned figure in finance with expertise in the commodities space since 1975, believes that fundamental and technical factors are aligning to push silver prices past previous all-time highs, potentially catching many market participants off guard. Oliver delves into the details supporting his thesis, including his view that any manipulation in the silver market will only intensify the upcoming price surge. He also highlights silver's increasing demand in the solar energy sector as a key driver. Although silver is trailing gold, a pattern seen in recent years, Oliver expects this dynamic to shift, setting the stage for an explosive rally. The World Bank has recently released its updated commodity market forecast, highlighting that while gold is likely to continue outperforming the broader sector, demand is projected to soften from next year through 2026. In contrast, the World Bank sees greater potential for silver, anticipating that rising demand and limited supply will support its prices over the coming years. Oliver reflects on the current bull market's age, now around 9 years, and compares it to previous bull markets, which often spanned roughly a decade, such as those from the mid-1970s to 1980 or from 2001 to 2011. He believes that if the silver-to-gold price spread reaches approximately 1.3%, a threshold MSA closely monitors, it could trigger a significant silver rally, potentially lasting several months. Join us as we dive into the video for a deeper look. Don't forget to subscribe and click the bell icon to stay informed about our latest updates.
I still personally, and MSA expresses this in our analysis, the monetary metals are in a bull trend, and now they're in an accelerated portion of the bull trend. Now, you can argue, when did that bull trend begin? We defined it in February 2016, a couple of months off the low. We said, that's it, it's going up. Bull trend, annual momentum broke out. Price didn't, but momentum did. But then it labored for a couple of years, between 1360 price, and it even probed back down in late 2018 to within over 50, 60 bucks of the prior low that occurred in 2015, which was around 1,050. So then in late 2018, you pushed up through that price base, 1360, call it roughly, and price really broke out. So you can define it there. Maybe it started in late 2018, 19, but we defined it as early 2016. Okay, forget that. It's aged compared to a couple other bull markets we've had in the past, which were 8, 9 years old, that kind of thing, mid-70s to 1980, the 2000 low to 2011. So it's a decade involved there. So we're now 9 years, but we have different fundamentals than we've ever had before. And we've also got better technical dynamics. So I think silver is at some point going to engage in a way that will drop jaws, in terms of its performance to gold. We call it a little dog on a leash to Mama Gold. Mama's holding a leash, and silver will run ahead of it, and then silver will run behind it. Today is the behind day. Silver's down more than gold by 1% or 2%. But that's common. It's been common for the last couple of years, where silver does follow gold, but it goes ahead, goes behind. There's a point at which, though, not far above current spread levels. And what we do is we measure the price of silver versus gold in terms of dollars per ounce versus dollars per ounce. So right now, silver's about 1.23 or something, the price of gold, 1.23%. If you get up to about 1.3%, we've got technical reasons to assume you're going to blast. In other words, the silver gold spread will unleash, not just for a few days, but probably likely months, several months. And that's what occurred in 1979 in the final year up to 1980 peak. And it also occurred in 2010-11 in the final year up in that bull market, where silver broke out on its spread basis versus gold and really unleashed. It's attached to the leash held by gold, but it can really pull out in front. And it tends to do that in the very dramatic phases of the price rise in both metals. So if that spread breaks out, and we think it's headed toward the breakout level again, roughly 1.3%. You see it up to that level where you divide the ounce of silver, the December silver and the December gold, and you come up with 1.3%. Put your helmet on. Because at that point, I think silver is going to engage far more dramatically than gold. I think we're going to do it. We're still below that level, but it's a level to be watched. And it will engage price as well, not merely the performance difference between the two.
With modest supply growth continuing to trail behind strong demand factors, silver prices are expected to rise by 7% in 2025 and by 3% in 2026, following a projected 20% increase in 2024. These forecasts come as silver prices have only recently begun to outperform gold, having risen more than 35% this year with firm support above $32 an ounce. Despite this rally, the gold-silver ratio remains relatively high, trading above 84. Historically, silver prices have shown a strong correlation with gold prices. Since July 2020, the gold-silver ratio has largely held within a 75 to 90 range, a trend that became particularly noticeable from Q4 2022 as both metals rose by roughly 70% during that period. According to Michael Oliver, close attention should be given to the silver-gold spread, which he views as a primary technical indicator rather than a secondary one. He explains that when this spread enters breakout mode, it has historically signaled the start of a powerful rally. Oliver anticipates that silver could climb to 2% or more relative to gold, marking a potential surge that could elevate silver's price well beyond recent levels. Now, let's redirect our attention to a video.
They're not going to, some of the smart asset managers are already making the move into the miners, for example. Newmont, for example, a big blue chip, and, there's some arguments against it in terms of, whatever, corporate management, whatever. It dropped sharply recently in earnings report. But still, it's in a 47, 48 area. And back in February, when like Druckenmiller started buying, it was $32. So, he's even up nicely since February, despite the recent drop. But the gold miners in general and the silver miners are behaving well. They're not, at this point, fully outpacing gold. We think that will occur. And I think, again, the most prominent technical I'm watching, literally, is that silver-gold spread. Now, I know a lot of people look at the ratio in different ways, and they treat it as a secondary indicator. I treat it now as a primary indicator because historically, when that guy moves into a breakout mode, and we have over the last couple of years, if you plot that spread, there's numerous rallies that go up to like 1.3% silver price per ounce versus gold price per ounce and pull back. You don't go back there again. You go back there again, you're going to blow through that structure. And it's like 2.5, 3 years wide. If you looked at the chart, you'd say, ooh, that's a price chart. I want to buy the breakout. You're going to gush silver up to a couple of percent versus gold. Now, let me say this. You go back 50 years and look at that spread. Where has it been during those 50 years? 21 of those 50 years, silver's been at least 2% the price of gold. That's almost a norm. And during the big bull surges, it was 6.5% in 1980. And in 2011, it was 3.5%. So that spread surges. But even just to go to a routine, normal 2% level, which when you looked at that graph going back 50 years, it's just gone back to a normal 2%. You do 2% times gold at 3,000, let's say. You're talking $60 silver. Okay? So watch that spread, because when that spread gets back up near 1.3% again, you're about to ignite both markets in terms of not just the performance of silver, but in terms of its dynamics in price and gold's price. It'll be beating gold, but they'll both get more dynamic. And I think it's at that point when you get those price rushes, and I'm betting that when that occurs, it will be partly due to the factor of the stock market causing a motion the other way and assets moving somewhere. The somewhere that's looking good. Well, right now, what's looking good? Again, look at that year-to-date chart I sent. That's silver and gold are outpacing the heck out of the stock market. And there's hardly any asset that matches them. And yet, yes, the press is finally acknowledging gold's a bull, but they're not beating the table about it. We don't have a fever yet. And the tone of gold, you look at its price action, it's not vertical like that. It's not parabolic with gaps and so forth. So we're not in that stage yet.
Gold has long been a cornerstone of investment portfolios due to its stability and role as a hedge against inflation. However, as the financial landscape evolves, diversifying into other precious metals like palladium, platinum, and silver may enhance resilience. Silver's impressive performance in 2024 has reignited interest among investors seeking alternatives to traditional assets. Over the past 5 years, silver's returns have varied significantly, ranging from -2% to +21% annually, in contrast to gold's more stable returns, which have fluctuated between 7% and 19%. Will silver continue its upward trajectory and surpass gold? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.